Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, 2020 is shaping up to be a very weak year for world trade. Firstly, however, we should note that today is a public holiday in the US, with the New York Stock Exchange closed and very limited trading in commodities markets there. But overnight, European markets rose about 0.3% across all of them, and yesterday Shanghai was up a very strong 2.3%, followed by Hong Kong, which was up 0.5%. Tokyo, however, fell, down 0.7% on weaker than expected GDP data. And in China, foreign direct investment in the final quarter of 2019 was 4% higher than the same period a year ago. This was a somewhat better result than many were expecting, and it is unlikely to be repeated in the first quarter of 2020. The flow of investment into China has been pretty steady since the end of 2017, despite the Americans and their tariff war. Overnight, the Chinese central bank let its official interest rate ease by 10 basis points to 3.15%, with a relatively small liquidity injection. Liquidity in the Chinese financial systems doesn't seem to be an issue at present. And a new survey shows that almost 70% of companies there can survive a cash flow crunch of 3 months, and about 45% can sustain it for more than half a year. But by the same token, that means that 30% can't survive a 90-day economic crisis. And China's economic growth will obviously take a heavy hit in 2020, and current estimates are that it could fall to 4.5%. These estimates, however, may prove optimistic. Japan's economy suffered its biggest contraction in 5 years in the final quarter of 2019, slowed by a combination of their sales tax hike and a destructive typhoon. And in Singapore, they reported that their economy grew at less than 1% in 2019, and they see that slowing even further in 2020. So it's hardly surprising that given all this news, the WTO sees 2020 as a poor one for world trade. And in Australia, new official research finds that lower interest rates increase housing wealth inequality, while higher rates do the opposite. And they find that investor activity accentuates the inequality effect of low rates. US Treasury 10-year yield is still at 1.59%. Gold is down $3 to $1,581 an ounce in very limited trading in New York today. And US oil prices are just over $52 a barrel, while the Brent benchmark is lower at just on $57.50 a barrel. And the Kiwi dollar will start today unchanged at just over 64.4 US cents. On the cross rates, we've held at 95.9 Australian cents, and against the euro, we're unchanged at 59.4 euro cents. That means that our trade weight index is now at 70.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.